Hey everyone, here's another mid-morning update. I've got Apple here, and if you didn't already find out, Apple beat on earnings by a couple cents, but it's showing their sales declining specifically in China and specifically also in the iPhone category. So Apple did sell off, and it is bringing down the market. The NASDAQ is down 3% right now. Amazon is down 5%. And a lot, Apple is the largest tech company, and it's because of that quite important. And I would not buy this here. Not at all. I mean, it is worth a shot to the upside, but because it's so expensive relative to the averages. Last time it sold off, it looked for support at different levels, 70 and 60. These are all split adjusted prices. And the current price of 109, it's most likely not going to hold. Not after this decline here. It's going to test that 106 level. And then I would not consider buying Apple until it hits some of its support levels, which are lower in the 94 region, maybe under 100. So I would not be a buyer of Apple for new positions here. The trend is up, but also look at this monthly. If I get rid of, I'll just leave that. If you look at the monthly, the downtrend could just be beginning in Apple, and it would still be in an uptrend. Here's the weekly. We've got like a cup and handle, almost a double top situation going on. And if Apple continues to sell, like we said before, somewhere around the 90 would be a healthy pullback. And in an uptrend, that wouldn't be a big deal. Just to test the price discovery process of the bullish uptrend. So again, I am short. I am looking to continue to place bear positions because this looks like it needs to be sold. So that's my opinion. Not any my recommend. I do not give recommendations, and don't take my advice. But that's just my opinion. What I am looking for buys is something like the XLE, which is loading slowly. And if you look at the XLE, it's been, of course, been a horrible sector, and it is beaten up. And it is also going down on these down days. But if you see the NASDAQ, the Russell, and the S&P, they're down almost 2%. XLE is outperforming. It's only down 1.3%. So on the XLE, which includes companies like ExxonMobil, Chevron, and a variety of other companies, I'm looking for something like a double bottom. Maybe we're going to get it soon. I have positions. I'm using options and stock, but I'm looking for something of a bottom. We got the 200-day moving average up above, maybe somewhere around there. That would be my target. Maybe some old resistance over here. That's what I'm looking for. So what is that? It looks like maybe around $38. Buying 28 to 38, looking for some $10 upside. That for me would be 33%. Using options, I would get more leverage. Put selling would also work, selling some puts. But this obviously, I think there's more upside. There's even, 48. So there's most likely we go to the moving average, and then there we could reassess to see if there's any more upside. But this thing moved $20 in the last run up. So that's what gets me interested. And if you look at, it's one of the only sectors that isn't as expensive because of just in price. Some of the companies here are losing money, so their valuation-wise are always going to be expensive when they're losing money. But just on share price, for a long-term investor, these bad news periods are buying opportunities. If you think the companies are going to stick around and survive, these are your entry points. And if they're going to eventually make money, because oil, of course, is still down, if oil starts to rebound and normalize between 50 and 60, these companies will be more valuable, these energy companies. So I would be looking at the energy companies for a recovery play. So this is the weekly time frame. There was about $20 in there. It is dependent on oil. Oil is breaking down, but not as bad, but it is breaking down. If you look at the, what is it, down 2%? And there's probably more downside. There is probably another, what is that, $5 in oil. It's such a scary market to trade. I am avoiding oil directly, but I am buying the energy companies. So that's just a quick morning update. Let me look at the indexes. The indexes, they're so close to the old lows from earlier last month. They're so close that it would not surprise me for all the indexes to go down to those, to retest those lows. And the Russell seems to be outperforming, but it most likely won't be able to hold that up. And if you look at cubes, it's got a 200-day moving average close by. And after that support at the QQQ 260, 261, if that support doesn't hold, then we'll be looking for the next support, which is around 249, 250. So most of the markets look about the same. It is Friday before the election, so I don't foresee people wanting to catch this selling, to jump in and try to catch the selling. So this is most likely all we're going to see for the day, is what I would expect as people process the bad news. There is quite a bit of selling, and it will take a little bit of processing, support building, if it is to start to eventually rally, or we might figure out that it should be sold. We don't know. That's why you have to be careful with these investment decisions. Make them a little longer term, just to be safe. Hope this was useful. If you have any questions, please comment, please subscribe, or just send me a message and I'll be happy to help.